and welcome to this Nedbank Private Wealth webinar on sustainable investing. My name is David McFadgen and I'm the Executive Head of Wealth Management for Nedbank Private Wealth, and I'm joined today by Tom Caddick, who is our Chief Investment Officer. And today Tom and I are going to cover off the vast topic that is sustainable investment, and we're going to try and keep it in a reasonable time frame. We're going to cover the landscape, what's the context of sustainable investing in the industry today. We'll then talk a little bit about what we at Nedbank Private Wealth are doing in this area. And then I think importantly, we'll talk about what our clients think about sustainable investing and what we're hearing from them. So hope you enjoy the topics, and we'll get started straight away. So Tom, thanks for joining me. And I think just on that topic of the industry landscape, it might be good just to spend a few minutes getting your thoughts on how we got to where we are today with sustainable investing. It's a complicated area, lots of acronyms. Maybe we can try and cut through some of that.
Hopefully we can cut through some of those. But it's been an astonishing journey, I think, that we've seen in the industry over the last 5 years. In particular, that's when the real momentum has got behind the investment industry. Areas such as the Nordics, I think, have been really strong in this area for some time now. Around some of those factors, around E, the S, the G, so the environmental, social and governance. And for many people, for the last few decades, there'll be elements to a lot of this that they've adapted into their own investment processes, and particularly areas such as governance. But I think really we've seen it start to dominate for these last sort of 5 years, and it's been, dare I say, it's quite a wild ride in terms of change, the amount of data providers that are coming through, the number of funds that are being launched, the number of fund groups. You will have noticed this, that fund groups that have suddenly started to unearth their own sort of rich and long history of investing in ESG, which for many they have, but for others I think it lacks any kind of degree of authenticity. But it really has been a period of change, and I feel like we've only really just started. I go to investment conferences, you go to investment conferences all the time. Sustainability, ESG, environmental factors are talked about all of the time, and that really has started to dominate the narrative for a lot of investors.
Yeah, I think you're right. I first probably impinged on my consciousness 25, 30 years ago, actually, but not necessarily coming from the Nordics, but coming from institutional investors. So whether it's big corporations, whether it's charities, whether it's central banks even, and it didn't really seem to impinge on the private client world.
Yeah.
But yes, in the last 5 years, it's now probably the number one topic that I find myself discussing with clients. I think the issue is it means something different to every client, and as you said, that's we're probably only at the beginning, because one person's ESG is different from another person's ESG, and we should debunk that acronym. So environmental, social, and governance.
Yes.
And as you say, lots of investment houses and funds are demonstrating their credentials, but many of them are just in one of those areas and not the other. So I found that governance is something that has probably been around a bit longer than the other two. Would you agree?
I'd agree with that. I think a lot of investment managers, analysts would say that they've incorporated governance in one form or another into their investment processes for some time. It's the sort of thing that we as an investment house have always looked for. Some of those sort of governance factors, not necessarily data-driven in some ways, and not necessarily with all of the factors that are now being incorporated into the views, but has often been a strong part of just sensible, solid investment management, of looking for businesses or instruments that are going to be here tomorrow and in 10 years and in 100 years' time. And a lot of that is down to good management, good governance.
Yes, and I suppose if we focus on sustainable investments, and we'll talk about that's really the approach that we've taken at Nedbank Private Wealth. There's a bit of a pun there almost because if the investments that you make don't work, by definition they're not they're not sustainable.
Yes.
So
it is an unsustainable approach.
It's an unsustainable approach. So I think we're definitely sitting as Nedbank Private Wealth squarely in the almost in the middle ground where we have to have one eye on the of course sustainability, but absolutely we need to deliver good investment performance for clients.
Absolutely. I mean, why don't we get into that? Because I agree. I see us as trying to now occupy that middle ground. We've had a long history of what I would describe as responsible investing, mm-hmm. which is in part taking our responsibilities as stewards of client money, of client investments very seriously. And you have a responsibility as an investor to try to influence and direct the way in which that capital is employed. And part of that just comes down to being an active participant in voting, in engaging with management, or when the way in which we invest is often to invest through other specialists, mm-hmm. Where we may look to the way in which do they approach their voting, and does that align with our standards that we would expect to be upheld. So, but we are now increasingly occupying that centre ground within sustainable investing, which is, I think, keeping a very sensible view on the core principles of investment. So portfolio management, which we hold dear and is very important to the way in which we look after client assets and build portfolios, and at the same time looking at the environmental, the social impact of the types of investments that we have within those portfolios, and ensuring that is invested appropriately. So it's really looking to incorporate both sides to that. And like you said, we could talk forever about that journey of sort of responsible through to sustainable through to almost regenerative now that we're starting to see, but we're looking to occupy that centre ground.
Yeah, so we're really both factors are really important, and not letting one really sway the other, I suppose. And there's nothing wrong with a different approach, and there's certainly some investment funds and some investment processes that really just focus on the environmental, social governance factors, and almost the return that you get from those investments are very much an afterthought. We don't think that's the right thing to do for the majority of our clients' assets. And as you said, I think that middle ground is a good way to describe it. So just digging a little bit deeper, how do we keep ourselves sort of honest on that? Because there's this phrase which now is bandied around, greenwashing, and people will have read that in the popular press as well as the financial press. So, I know that our sustainable investment offering at Nedbank Private Wealth, one of the key tenets that you've built into it is authenticity, and it really has to be, genuine. So. What are some of the things that we do to keep ourselves honest in that regard?
And I think that's the key point, isn't it? It's honesty. I think the key tenets that we hold on to are the authenticity and the honesty to our approach in the way in which we're looking to. You don't make grandiose statements mm-hmm. about an investment that will change the world. And, I don't want to sound glib about that, but you do see some of these sort of extremely verbose statements that come out, which really, I think, lack that degree of authenticity and what they're really trying to achieve. But it's about, I think, starting off with a desire. And I think all of us within the business, all of us within the investment team, yourself, myself, and the rest of the team, is about a desire to want to do this appropriately, and with that authenticity that you say. So how do we go about doing that? Well, number one, it's understand what you can do and what you can't do. So, we have a long history of partnering up with specialists. So we use specialists to give us the type of exposure that we're looking for, and that covers both the environmental factors, social, etc., and then using our expertise to pull those portfolios together. So it's in finding the specialists, pulling those portfolios together, and then providing that overarching portfolio management, which is critical. Is about defining what we can and will do. So we've always talked about leaning the portfolio towards the good. We'll come back to that, I guess, in a second. And then, of course, looking to avoid the bad. So the inclusion and exclusionary factors that are important. We're also data-led, and that was important to us. Now, that has been and continues to be something of a mindful in the industry, where there has been a race for many data providers to be able to meet this increasing demand for data around the E, the S, and the G, the environmental factors predominantly, but also how do you put numbers around the social and the governance factors? So it was very important for us to partner up with data providers that we felt had the breadth of coverage and the desire and the capital backing to be able to continue to expand their coverage. So we spent quite a bit of time and effort looking for the right partners. And we continue to invest heavily in that space to make sure that we've got access to data. So, for example, we utilise Morningstar ESG research as the cornerstone of the data that we use within the portfolios. We also incorporate Morningstar and Bloomberg to provide data around the E, the S, and the G within our portfolios. But that doesn't drive the decisions purely.
No, but I mean, I think just to emphasise, it is important, because otherwise it could just be, well, Tom Caddick says this is a green company, so we're going to invest in it.
You're absolutely right.
That isn't honest, and that's not authentic. So just so that people understand, we're getting independent data from expert specialists who are scoring these companies across a range of criteria. And that's, it's not hidden data. It's available, and we can justify
absolutely
the choices that we're making.
It's absolutely that. And increasingly, there's more and more data that we need to be able to provide to back up what we do, and that's in all of the portfolios that we manage. It also enables us to hold those specialists that we invest in to account. We can hold their feet to the fire and say, just exact example that you've just given of, but where we are utilizing a specialist, let's say in investing in electrical vehicles, for example, future mobility or an aging population, whatever it may be, or it's a simple bond fund with a leaning towards SDGs, so Sustainable Development Goals. Actually, is it doing what it said it's going to do? And how can we back that up with the data? What are the numbers telling us? So we incorporate both those quantitative factors, which in many cases might be based on teams and teams of research analysts pulling together data, and to package that up on the back of a stock, of a company, packaging up into a portfolio so that we can understand, is it doing what they said they're going to do and what we believe they should be doing.
Yeah, but I think I interrupted you when you were about to say, but that's not driving the investment decisions. That's almost a kind of hurdle that has to be met.
Yes.
Before it's even considered, and then that's where the investment management comes in.
It's exactly that. I mean, I think we identified fairly early on that you need to still marry up those two key areas of those environmental and social governance factors, which we believe should be data-driven, data-led, and the traditional investment management capabilities that we have to be able to suitably and appropriately manage the portfolios. And a great example, I think, of that is that if you were purely data-led, there are certain types of stocks, certain types of business which will naturally screen well. Typically an IT company, a tech company, which has a fairly limited carbon footprint, maybe has fairly progressive social credentials, will screen incredibly well. Now, if we were to purely use that screening, you could end up with a portfolio where your equities are predominantly tech-led.
Yeah, so if we ranked all the sort of available investments in kind of screening order, many of the top, whatever, 10%, 20% would be tech type companies or that kind of thing. So you can't just blindly.
It's exactly that.
Blindly use the screen.
I mean, loosely put, anyone can put together on a spreadsheet a sustainable portfolio. But is it a portfolio that is designed to meet investment objectives and goals, to perform in a particular way? That's the really important factor. And I say about anyone can throw anything together on a spreadsheet, and that's because the numbers are what they are at that point in time. There are also certain considerations like what is the pathway, and what considerations can you. And we've had, numerous and ongoing discussions around the appropriate inclusion of certain pathway industries or areas that are designed to get us to a point of net zero, for example, if we're talking about environmental factors, as opposed to just purely screening well today. So you've got to blend, I think, all of those considerations together and apply solid portfolio management to a portfolio in this area to meet those long-term investment goals.
Yeah, and I think it's a good point, which often comes up, I think, in this type of discussion. If you kind of punish people for how they are today, even though they're moving in the right direction, that's probably not the right approach to take. So, a good example might be some oil companies. So, purely from an environmental perspective, today in the history of some of those companies, you might say, well, why would you even go near that in this type of portfolio? But actually, there are some oil companies who are very progressive in some of the other aspects of ESG, and they might not be there today, but they've set themselves targets. And I think what you're saying is we've got to have a mixture of both.
Yes, or at least you've got to take those considerations into account. Yeah, absolutely. I mean, I think nuclear is probably a really good example of that as an often mooted transitionary energy source. And there are swathes of Europe which probably wishes that they had access to greater nuclear production at the moment, whilst we move to a purely and true renewable energy sources. And I think there are some hard discussions that are needed when one's building a portfolio about what are you excluding and what are you not. And your example on oil companies clearly would be part of an exclusionary area. You wouldn't really look to get exposure there within your portfolio. However, there are considerations to be taken into account, like the level of future investment that will come from those to be able to transition to more of a renewable basis. So you have to take those considerations into account when building the portfolio, but it is vital that it stays true to what it is.
Yeah. So let's talk a little bit. You mentioned leaning towards the good or embracing the good in the portfolio and avoiding the bad. And again, being honest and being authentic, I think those phrases are pretty accurate, because we're not saying there's only good stuff in our portfolios and we avoid all the bad. Okay, so we are leaning in that direction and trying to get closer and closer as things evolve. So could you just talk a little bit about both of those, and again how we're using data to ensure that we are leaning towards the good, and then also how we're using data to avoid the bad?
Well, we won't get too technical on this, but yeah, I mean, our lean to the good. We've adopted the SDGs, so the Sustainable Development Goals, as laid out by the UN.
Yeah. And there are 19 of those?
17.
17 of those? Right, okay.
Of those. And we look to ensure that our portfolio is, number one, positively skewed. So it has a positive alignment to SDGs. We don't state one over another, but it is positively aligned, not negatively aligned. And we can back that up with the data that sits within the portfolio.
So what would be a couple of examples of those SDG, Sustainable Development Goals?
Well, it covers a number of different areas rather than sort of naming them all, but it will cover things like environmental factors, of multiple factors, sustainability as a broader circular economy, as well as the broader social factors such as poverty, education, equality, etc. So there are numerous factors covering a range of sort of 4 or 5 broad categories. We have a positive alignment, and we also look to have a positive alignment over and above a standard index. So we want to be positively aligned and then more aligned than one would naturally get. And then we look to significantly restrict our exposure to what are generally termed as exclusionary criteria.
So that's avoid the bad side.
Avoid the bad. So this will be things like munitions, landmines, child labour, fossil fuels, etc. And when we talk about excluding, we're talking there about profit or revenue that is generated from those business lines or where there is exposure to those business lines. Some of those, I think, are just, typically we think of the exclusionary criteria as being sort of commonly held. So rather than trying to adopt sort of strong religious or moral belief, because we've been keen to avoid and just occupy that middle ground, this is about commonly accepted areas of exclusion.
And I think, to me, it makes perfect sense. And I suppose what we're trying to do is lead our clients in a complicated area.
Yes.
Because one approach we could have taken is say to our clients, what does ESG mean to you? What does ESG mean to you? And I think that has happened in other organizations. What happens is there's a very confusing array of different solutions and products that are trying to be all things to everyone. And I think it is incumbent on us as people who advise clients to actually say, well, this is what we think, this is where we are, but be very clear about it. And I think maybe that leads us on to how clients have sort of viewed this. It's been in place for some time now that we've sort of evolved our offering to a sustainable offering. And from my experience talking to clients, it really has gone down very well. As we said earlier, it's a hot topic. It's probably, as I said earlier, the number one topic that clients bring up. And interestingly, it's not, as you might think, stereotypically sort of younger people necessarily that are just interested in this kind of stuff. There's no real one demographic. I would say it's across the board. Clients are interested in this, and they're interested in what we are. We are doing in that space, and I think it's. It really feels that we have moved on as an industry, as we talked about earlier, because it's in the mainstream now. It really is. You see it on the 6 o'clock news or mainstream media. Have you had any experiences where clients have sort of not kind of bought into this? And there are some clients that perhaps think maybe this is a load of mumbo jumbo and it's not for real. Any sort of negatives you've seen?
There's not been necessarily negativity. I think your point there about things will resonate differently with different people, like they will with you and I. There'll be certain factors that are maybe close to our heart due to maybe it is a religious belief, or maybe it is past experience, or
Yeah.
something that's close to your heart, that will resonate in different ways. I think there's also quite often changes in understanding of what something might mean. So, for example, board diversity, for example, for some people that might resonate in a sense of seeing that as positive discrimination, whereas another might see that as actually looking to get a board that has a broad breadth of views, of backgrounds and drives to give greater balance to a board, which should build better decisions to go forward. But it will resonate differently. So I think part of it is down to understanding. Absolutely, it's not about everyone wants has a desire to go down a particular route. We talked about the PRI sort of exclusionary criteria earlier. We accept that there are some which are just landmines, child labour. I don't think we've come across many people who have said, no, I'm really keen on investing in those areas.
Yeah.
But for sure, I think it's been incredibly positive. This is all about having a conversation as well, and about building an understanding. And I think it's incumbent upon us to keep that conversation going, to keep communicating, not to fall back on lazy acronyms and overcomplicating matters. It has troubled me slightly that as an industry, some groups have been performance driven, looking at just sort of almost pushing an idea because it's done really well over a short period of time, when in reality that's down to the fact that it's been tech heavy, for example. So I think honesty, integrity, authenticity are absolutely critical.
So I agree, and you mentioned performance there. So I think we should probably uncover that elephant in the room, and maybe just a quick story from me. So I think about 4 years ago, I was at a conference, actually in the Nordics, as you mentioned, of investment professionals, and the moderator on stage asked us in the audience, how much performance would we be prepared to give up in order to meet our ESG goals, our sustainable goals? And we had little pads that everybody put in a number. And I think the average number, people said, well, somewhere between 2 and 3% per annum, I think I'd be prepared to give up, and my clients would be prepared to give up, in order to sort of say that I'm investing sustainably or in some sort of green way, or whatever, however it was sort of expressed. I was at the same conference 3 years later, so a couple of years ago, same question was asked, and the answer was zero. I'm not prepared to give up anything. This has to meet that middle ground that you talked about. So, and a way of properly engaging with our clients, because let's face it, we're here to manage clients' wealth, and is to demonstrate that we're able to generate similar levels of performance with these type of solutions as perhaps the old-fashioned non-sustainable solution. So have we been able to do that, and what should clients expect from a performance perspective?
I think you're absolutely right, and I'm not surprised to hear you say that about the zero. I think philanthropy is a very different thing. Broad charitable factors. This is not what we are talking about here. It is vital, and we've said this from the start, it's vital that a sustainable proposition stands up against all other non-sustainable or sort of, factors that are just purely index-led. It has been important to design the portfolios in such a way that they are designed to meet the very same investment goals that are, I suppose, a traditional portfolio would have done. So absolutely no give up, and it's been designed into the portfolios in terms of expected returns. They're designed with the same investment management principles. But of course, given that you do have variations in makeup, it does mean that the pathway could be different over time. So your goal, your end destination remains the same, but the journey will be slightly different.
Yeah, so I think what you're really saying, Tom, is that over shorter time periods, those type of portfolios can diverge quite markedly, but over any sort of reasonable investment horizon, which is really where our clients are and how they invest, then the expectation is that there's no give up in performance due to applying these additional factors. And I think that's important, as you said, that is how we are going to sustain a sustainable investment offering. We've got to deliver that performance. So I think it's a big subject, as we said at the beginning. I'm sure we could continue talking and exploring some of the, as you say, we're trying to avoid some of the technical aspects, for which I'm grateful, because it's a complicated, topic. We're about out of time, but is there anything, Tom? What would be the sort of key takeaways that you think our clients in the audience should take away in terms of sustainable investing? Either, how do you think things might progress in the industry landscape? Anything in particular about Nedbank Private Wealth? Just some closing remarks from you, if that's okay.
I think industry-wise, it feels like this is only just the beginning. We've had a huge period now of change and flux, but we're right at the heart of that at the moment, and we can expect, I think, continued change, continued development, but also for things to start to settle in terms of things like agreed metrics, some of the agreed taxonomy that we're seeing coming out of the EU. We can see starting to settle down, I think, in terms of the way in which the investment world accept and embrace, where companies accept common standards, etc. But that requires time, discussion, all of that to settle. You can't expect it to settle immediately. So I think we're going to see continued change and development.
Just sorry to butt in. I think what one thing that's reminding me of is this is not it's not led by government. It's not led by regulators. It's led by investors. And I think that's a key point. And I think that's a good thing. Yeah. Because it means it's sort of people are not box ticking or
I absolutely think so. Yeah, and I think you're right. I think that area. I think we will continue to see grow. I think, from our perspective, it sounds very cliched, almost like you're on an X Factor show. It's a journey, but it is, and it's vital that you proceed with honesty and authenticity. That for me is key. Things will continue to develop, but maintain and stay true to your values.
Okay. Well, thanks, Tom. Thank you for joining me on this small part of that journey. So just to say to our audience, thank you very much for joining us. We hope you have found the information on sustainable investing informative. And if you do want more information, please feel free to contact myself or Tom, or indeed your usual Nedbank Private Wealth contacts. But that's it for now. Thank you very much for joining. Goodbye.